When I saw like the inner workings of Visa and like the traditional payment systems, I was like, wait, why can't we do this also?
This is Raj. He spent the last 10 years working on finding better ways to move money around the world.
Why can't money move at the speed of the internet? We can send an email or text message to anyone, but we can't send money. Like, why is that?
Raj started at Visa, then founded his own payments company, and now works as the head of stablecoins and payments at Monad Foundation. Why? Because Raj believes blockchain is the missing piece in his quest to unlock better global payment systems.
I've actually been looking for a blockchain that can actually fit the bill of what a global payment system could look like. Until Monad, I've not been able to see a blockchain that can actually fit that bill. I almost think of Monad as Ethereum perfected.
Without further ado, let's dive into today's episode. Raj, if you would kick us off, please introduce yourself.
Yeah, I'm Raj Parekh. I'm head of stablecoins and payments at the Monad Foundation.
Awesome. Well, fantastic to have you here. Stablecoins payments has been all over the conversation as it relates to crypto recently, but really want to take this as an opportunity to zoom out and give some context as to what's been going on behind the scenes over the past few years. And I think when your average person thinks of crypto, they think of some form of digital money, tokens, or currency, but they're not generally able to go buy groceries with crypto or replace their bank with crypto. So want to give some context as to where crypto sits in the financial system today and where it could sit in the future. And probably a good way to tee that up is to run through your experience and your story in payments, as it definitely goes a lot broader than your work at the Monad Foundation. So where did you start your work in payments?
Yeah, I mean, to be honest, my first introduction was, my background is actually in security and payments. And so started my career at Visa, I was building out a security platform to help banks think about breaches, exploits, and hacks. At the intersection of security and payments, I discovered this thing called Bitcoin and the blockchain. And it was a combination of my background and experience with both traditional payment systems, but also realizing that, but Visa is actually moving money through wires and mainframes, but blockchains are actually open source systems that work 24/7, borderless, and it can send money anywhere in the world. That was a fascinating eye opener for me. Around that same time, Visa was also involved with the Facebook Libra Association. And so I was fortunate, had a front row seat during that time period and was one of the few crazy folks at Visa talking about crypto back in the day, and was leading crypto products there, where ultimately there's a lot of things in crypto like DeFi or NFTs. We felt like stablecoins were actually just getting started, and there was Tether and Circle. There's only a handful of folks that were really out there doing it. And so we felt like stablecoins were like the best path for Visa. And so I ended up leading and launching stablecoin settlement there, where you could have an issuing bank and acquiring bank settle transactions of Visa all over public blockchains. And this was I think a culmination of the insight of blockchains being 24/7 borderless. How does that get plugged into a large, financial payment network? Picking the right parts of it, and then also, adding the stablecoin layer to it. But this was also, 5 years ago. No one quite cared about stablecoins back then, and especially with the volume and the adoption. But obviously, it's grown significantly since then.
So you sit in an interesting position because you're coming from Visa, a payments giant, and while you were at Visa, if I'm understanding correctly, you had this epiphany or this moment where you realized there was a high probability that blockchain was going to replace traditional systems. What was that specific moment, and how did that change the way you thought about payments and the financial system?
Yeah, I mean, I think first off, markets are efficient, and I think folks are hyper rational when it comes to payment systems. They look at unit economics, they look at spreads. It's very data driven and numbers driven. And so for me, it was the big eye opener was if we have open source systems that move money 24/7, that also has low transaction fees, that's going to be a lot more efficient than what we see with, 5 to 7 days with wires, or $25 for like the cost of, moving money, or like the FX spread for like a long tail currency. Like these types of things start to erode pretty quickly. And so for me, the open source nature also allows builders and developers, which we've seen historically in the blockchain space, build permissionlessly as well. You can't build permissionlessly on Swift or some of these existing systems today. And so it was like a deadly combination of permissionless builders that were now like looking to build the next wave of financial products. At the same time, you have the characteristics of decentralized systems that also can move money anywhere in the world. Like for me, that was just like a no-brainer back in the day, where I was like, this has to be the future. Because historically, fintech has always been lipsticking on a pig, for like a lack of a better term, because you take the existing system, you build a nice wrapper on top of it, and then you package it up to consumers. And that's what's been fintech historically for the last 10 years. There's no real innovation. It's really just a brand and marketing play. Blockchains actually present a paradigm shift in financial infrastructure that hasn't existed before. And I think that innovation is still underrated in some capacity. And I think people are starting to like wake up to it now.
Yeah, it's always good when the new system that's like being pitched or thought of is just like better than the traditional system, and you have a multitude of reasons for why that can be. But I think one of the reasons that people don't understand crypto and don't understand why crypto or blockchain might actually be a better system is because they don't understand the payments system and the payments infrastructure that exists today and has existed for the past few decades. So maybe we could run through like very high level what the specific inefficiencies are in the payment systems today that actually can be made more efficient and just overall improved by blockchain.
Yeah, I mean, we can go through a few specific use cases. I mean, the first one is remittances, as an example. I want to move, money from the U.S. to my friends and family in Mexico. They may need to pay a healthcare bill or a student loan or some type of, they want to buy a cup of coffee. Now, that transaction that could be, $100, by the time it gets to my friend or family, maybe it's actually worth $90 because of the FX, the FX currency exchange that took place in between. And so you have a transaction fee plus an FX spread on top. And so you're actually giving less money to your friends and family than you actually hoped for. With stablecoins, I can send $100 in USDC to someone in Mexico. They can receive that in their wallet and they're getting $100. That's, I think, that's like a 10% potential difference there just in that transaction. I think another example is that I might be a freelancer where maybe I'm in the Philippines or I'm in Argentina, and I'm working for a US-based company as a contractor or a freelancer. I want to get paid in dollars. I don't want to have maybe PHP or ARS. I want dollars, and like the easiest way to get dollars is not actually going to your local bank branch. It's actually receiving stablecoins. If today going to your local bank branch outside the U.S. to get a dollar-denominated account is almost next to impossible. You need to have some type of relationship manager or private banking type of relationships in order to actually make that happen. But with stablecoins, it's batteries included. I can get dollars instantly from my company in the U.S. and now I could use that as part of like my daily like wealth preservation and strategy. And so it becomes a financial tool for like that segment of the market. And then if you even take it up a higher level, imagine an import exporter. Today you might want to, maybe source pistachios from Europe over to Brazil. Sometimes there's very different transaction types. And so one example is pay 50% upfront, pay 50% once the transaction is actually completed. Now, if you want to move money from Brazil to your European exporter, that might take you 2 or 3 days in transit. And so until that money actually hits that account, that shipment's not getting released. Now imagine if you can send that 50% of that transaction same day in seconds instantly. That supply chain shipment is actually being moved right after that. And so if you compound that over to like the global supply chain, that's like 2 days of efficiency right there. That's a ton of cost savings and a lot more acceleration and just like overall economy and production, which is really something we really care about at scale. And so like what may feel like micro to all of us for the very specific use case, if you extrapolate that out, that's actually massive efficiency that I think the world's actually going to start to experience with these new systems also.
Yeah, I don't know if this analogy has ever been used, but it makes me think of like the pretty seamless upgrade of the like toll systems on roads that we've seen over the past like 10, 15 years where, 15, 20 years ago, you would pull up to the toll booth, you'd wait in line, you'd get some change out. When it was your turn, you'd pull up and like drop it in the change bin. Maybe you'd actually have to like interface with a human agent at the window, and tolls were always backed up.
Right.
But, over time there's been this like revolution where now it's all automated, and the system is more efficient because you're not waiting in line for one person at a time to like put their change in the bin and get their receipt. And you don't even have to pay the toll booth operators. Like, it's all automated. There's just cameras set up, tracking license plate, tracking your Easy Pass, and you just drive through that, and it's a better experience. It's theoretically a bit cheaper, and it's certainly more efficient across the board. Is that how you envision the like crypto payments takeover, or how is this going to like play out?
Yeah, I mean, I think just to build on your analogy, I mean, in that example, the toll route experience, it was abstracted away from like the driver in that case. When it changed, it was also very seamless. The driver's not thinking about it. They're like, okay, cool. Like, I'm just going to go all the way through. And so it was the heavy lifting done by the company that upgraded their systems that said, hey, this is actually a better way for us to change this system, that we can improve the overall experience, we can improve our margins and our, and the actual experience for the driver itself. And that's the change that's actually that's actually happening as we speak right now. Everyday consumers and businesses may not notice it. They're going to be the beneficiaries of that improvement in efficiency, but it's going to take that company that provides that service to then make that leap and say, hey, I actually want to use a better system in order to accomplish what I'm already doing today too. So I think it's a great example. I think it's going to be underappreciated by folks because it's just going to be used and it's going to be the new normal. But I think that's like the path that we want to get into, is that if we can fully abstract away a lot of these experiences away, make that transition seamless, then we're now creating that new normal that everyone can use as well.
Yeah, for sure. And like to your point, you might notice when the system's been overhauled and you go on that annual summer vacation and all of a sudden you're not sitting in traffic at a bunch of toll booths, and maybe you get there a half hour faster that year. You might notice it then, but you're probably not going to notice it in advance if some local news picks up an article that some highway is implementing automated toll systems versus the traditional. And it'll probably be the same with payments as well, that the end user, the end person or business that's just looking to send or receive money is going to receive it faster with lower cost.
Yeah, I mean, that was actually one of the big questions for me at Visa, was like, why can't money move at the speed of the internet? Like, the internet's been around for a long time. Like, why can't we can send an email or a text message to anyone, but we can't send money. Like, why is that? And I think going to your toll booth question, it's the same question as like, why can't we make this better? And for a lot of people, when they first sent the first email ever, that was like a pretty big eye opener. Like, oh damn, I just sent a memo across the world and it actually reached someone. We actually haven't been able to have that moment with money movement yet, which is kind of weird. And when I saw like the inner workings of Visa and like the traditional payment systems, I was like, wait, why can't we do this also? But blockchains actually present that opportunity where, blockchains like Mana could actually move money at the speed of the internet. And I think that's like a really powerful unlock that people haven't fully experienced yet. But it's going to be seamless in the new normal eventually when it happens also. But a lot of companies are now jumping on that bandwagon and realizing it also. And so I think that's the opportunity that we have in front of us.
I think an area that people tend to get like tripped up around this is apps and services like Venmo or Cash App or Zelle, for example, that are generally like a product from like a bank or a financial institution plugged into their like broader experience. And people might say, hey, I've been using Venmo for 5 years and I split the check with my friends when we go out to lunch, and it connects with my Facebook or Instagram profile, and that's pretty cool. Like I move money quickly, and sure, I'll wait 3 days for a free transfer on the end of that. But why do you have such a strong level of conviction that blockchain is just going to eat those systems? And that decentralization can ultimately win.
Yeah, I mean, I think just to even play with the Venmo example. So Venmo has been around for almost a decade now. you can only use Venmo in the US, which is kind of a crazy thing to think about because we all use it in the US and it works really well domestically. But ask that same Venmo user to send it to their friend in London or Spain or Africa. They can't. And PayPal actually like can't even send money between their Venmo accounts and PayPal. And they were actually able to connect both accounts using blockchains and stablecoins. And so the interoperability, but also the global nature of our systems allow them to do more than what they've done historically. Because payment systems and financial systems historically has been largely domestic or regional centric. And so you could build a great product experience in your market. Now, the minute you want to expand globally into more markets, that's a whole new, can of worms right there. And so Venmo has never been able to be global and still today is not live yet. Stablecoins actually present the opportunity where if you had the Venmo wallet connected to your US bank account and then also be a stablecoin wallet at the same time too, now all of a sudden I can send money to Danny and in Africa or wherever you're traveling across the world, and you could actually have that dollar in your pocket too. And that unlock of even connecting the PayPal systems and Venmo together and having stablecoins be that bridge, I think that's like a powerful unlock of just like what this technology can actually do. And even Cash App as an example too, it's not a global product. It's actually just US centric. I think as the world starts to get more efficient, a lot of these fintechs are realizing we've kind of tapped out of the US market or their own domestic market. You have to start to be global. That becomes your new competitive advantage as well. And so stablecoins allow you to be global from day one and allows you to start to enter new markets you've never had before. And that's a huge accelerant that we haven't seen in technology just generally.
So it basically seems like if we're summarizing this conversation thus far, it's like this is happening. Blockchain is taking over the traditional payment systems. It's largely going to happen behind the scenes so that the end sender of money, recipient of money, what have you, is just going to notice that it's faster, it's cheaper, it's an overall better experience. When people think about this in a more detailed sense, I think the obvious question is trust, right? Like, well, I don't love that the bank takes several, if not many days to send a wire internationally, but at least I trust that institution. It's been around for many decades, if not centuries. It has, some degree of FDIC insurance in the US. How should people and businesses think about trusting blockchains, and what options do they have in terms of verifying security, insurance, and the like?
Yeah, I mean, trust is a pretty deep-rooted question, and trust is it's not created equal as well. I mean, one person may trust JP Morgan, the other person that might be outside the US may not trust their local bank or their government for that matter as well. And so I've seen both scenarios where there are folks that are, begrudgingly using like their banking system in their core market. They know that their bank is, clipping a lot of, fees or not providing the right service for them too. And so I think what we've seen is that we are fortunate to be in the US where there's, compliance and regulatory and like the right types of structures involved to kind of elicit trust. But that's not necessarily, you can't extrapolate that to like every part of the world also. I think blockchains present a new neutral option where it's really focused on transparency and not trying to be extractive. I think by nature, blockchains being decentralized actually gives it that benefit. And I've said this before, but payment systems have always started off decentralized. And so blockchains are just like following that same step in that journey of how origin stories of Swift, of Visa, of all these systems have started by being a decentralized organization. And so I think we're actually following the footsteps of giants before us, but we're doing it with 10x better technology now and a true platform shift. But the trust component is going to actually build upon that decentralized foundation too.
What is a decentralized foundation? When you say that, like, initially payment systems were decentralized, what does that mean?
Yeah, I mean, the beginning of Visa was actually a consortium of banks. So you had and you could think of these banks as validators, for blockchains. And so you had, 100 plus banks that decide, hey, we're going to trust the Visa network and we're going to allow you to transact on it also. And similar to how, you have validators on the blockchain side that help validate and secure transactions for the overall network, that's actually what we saw play out. Same thing for Swift. Swift is a membership of banks around the world that are saying, hey, we actually buy into a shared ledger and a shared network and messaging layer to then coordinate transactions with. And if I extrapolate that same definition, you can find that through line between, oh yeah, that defines Swift, Visa, as well as blockchains also. And so that's actually how payment systems have always started. It's never, you can't build like a multilateral system by expecting you to build bespoke relationships with every single individual. Like, it actually has to start with the network effect from the very beginning. And I think blockchains, either knowingly or unknowingly, have actually started that way too, which is really exciting.
I think that's probably little known. I didn't know that fact before we had the opportunity to chat a couple times. And I think it's probably the best way to explain why blockchain actually matters. Because if you don't have to know one thing about technology to know that if you're a Bank of America customer and you want to pay someone who's at Chase or TD Bank, and you can't do that simply because they're at a different bank, like, that would cause a lot of problems.
100%.
People would be not only upset, like, people would be unable to do the majority of transacting that they do. If my grandma can't cut me $100 check for my birthday, thank you, Grandma, very generous. But like, if she can't do that just because we're at different banks, like, the entire system falls apart. So this notion of multiple contributors kind of pooling their trust, and it's not just, hey, trust Joe or Harry or Raj or Tom. It's like, hey, a bunch of trusted actors have come together as part of a group and said, this is the common standard that we're all going to use. That creates a better system. The more people that you have involved in that system overall, the higher degree of trust, or trustlessness rather, because there's fewer people that have a large stake or a large sense of ownership or control over that system. So it just really, I think, goes to show that this is clearly where the financial system should go and is going, simply because it makes sense.
Yeah, and I mean, as you're talking about, those specific problems around moving money between banks and, the overall network, it kind of gets me thinking about the consensus layer of like what's being built with blockchains, right? Or how like the consensus layer is now like coordinated with the actual execution of it, right? And then you have validators that are, securing everything as well. But that's exactly like what's being played out, but it's now all driven by code, which is like a beautiful thing because now it's very objective. It's not a gatekeeper that's saying you can't make that transaction. It's actually all driven from a neutral body that is permissionless and open source around the world. And I think that's like the beauty and like trend line that I see for the future that I'm like excited to go build as well.
Yeah, definitely. So again, kind of like recapping where we're at thus far, payment systems have always been on this track of decentralization, permissionlessness, leading to innovation. Blockchain is a very key innovation that allows for a lot more efficiency and for a better experience for anyone to participate in the financial system, regardless of the country or location or geography that you're from. Now in 2025, there's a lot of blockchains out there. Some people, will certainly know Bitcoin and Ethereum and Solana and maybe Monad at this point. But as you get down the list, like, there's many systems that have their own differences and that ultimately are trying to compete for transactions at the end of the day. How are the big players in the financial space, given that this is an inevitable upgrade, how are the big players in the financial space thinking about choosing which blockchain or blockchains they'll use for the future?
It's a tough question because, some of the expectations that you have in a blockchain system or even just a payment system, just even like abstract this even further, it kind of requires a better understanding of your use case also around it. And so if we use global money movement or moving large sums of capital, and doing it at high throughputs and speeds and like deep liquidity, it actually requires a really important upgrade to like what that system could look like. And I'll give you an example. When I was at Visa, one of the first transactions we did were on Ethereum mainnet, and it worked, but the transaction fees were absurd for that type of transaction. We're like, hey, that's probably not going to be sustainable longer term. And then you have this EVM network effect that's kind of played out from Ethereum, and like you've seen the branches of different blockchains kind of emerge from it. But we actually haven't seen that throughput that you can actually think about when it comes to like Black Friday or what Stripe's doing also during those time periods where it's like about 2,200 TPS. And what ended up happening is that folks started to flock towards blockchains like Solana or like non-EVM chains, right? And that's like the maze that we've kind of created in the blockchain space for so long. And I've actually built with every single blockchain out there at this point. We've actually played broadcasted transactions, have like observed like what it means to build. And I've actually been looking for a blockchain that can actually fit the bill of what a global payment system could look like. And I think it's been really clear to me is that EVM is like the easiest to build with. It takes weeks and months sometimes to work with non-EVM chains. It's absurd that we're spending that much time just to get an incremental benefit. At the same time, like we have to scale it to like 5x what Black Friday loads are. So we have to be at 10K TPS around that level. And then also like I can't, like my Visa experience with Ethereum, I can't have the transaction for a $100 transaction be $20. Like that's absurd.
Right.
And so you need to have predictable near zero gas fees and transaction fees in order to move money as well. And until Monad, I've not been able to see a blockchain that can actually fit that bill. I almost think of Monad as Ethereum perfected. It was like the promise of what I saw at Visa a long time ago with open source 24/7 blockchains. I didn't actually get to experience like a true like real like a fully realized version of it until right now. And I think this is why, after building with 20 plus blockchains, experiencing like the heartaches of it, I finally have the conviction that there's like Monad and blockchains like Monad can actually scale to be global payment systems. And I think that's an exciting opportunity.
Couldn't agree more. So 10 years ago, you're at Visa, you have this thesis basically that relatively soon money is going to move at the speed of the internet. You see Ethereum come about, and presumably the thought is like, okay, we're on the right track here. Like this is a decentralized system the world can participate in. It is secure, it's trustless, so that box is checked. However, the fees are too high, and ultimately the throughput is too slow to handle the scale of payments where we're at today, let alone where we're going to be in 10 years. So I would imagine that a lot of the past 10 years has been kicking the tires on different systems, looking at new research, new innovation that's come out of the blockchain space, and applying that to the problems that the payments industry is facing. And now we're at this point where, the network effects of EVM are really strong. Obviously, performance, low fees, and decentralization are all key. And the chain that's really pushing the frontier is Monad in that context.
100%. I mean, I can't really think of another option at this point, which is the startling, like I think, epiphany that I had when, if you really want to build, and just to give you an example, payments is actually a low margin business. You typically have, maybe anywhere from 50 basis points to maybe 100 basis points, depending on like your corridor, but it's a low margin business. And on top of that, if you're asking me to say, throw in like a high transaction fee, that's awful. And then also at the same time, you might have 1,000 or million $10 transactions that are taking place at any given point. Now you need to have throughput to actually meet that. I give you the Black Friday example, like you're having a ton of these like tiny transactions that are taking place. You need these transactions to actually get completed. Otherwise, it's bad for business. It's bad for everyone around like that entire ecosystem as well. And so these things are table stakes. It's actually expected if we want to like move into the next generation, the next chapter of the ecosystem. So I kind of think of the last 10 years as the playing ground, and we've made a ton of progress, right, which is great. But now we're entering the big leagues now where people are saying, okay, cool, the maturity in the system is there. And you're starting to see real adoption right now from like highly credible FIs and PSPs and traditional payment companies and fintechs. It's because they now see that order of magnitude difference in experience as well.
I want to go back to the trust question as well, because to your last point there, adoption is increasing, trust in blockchain systems is increasing, but I still think we have quite a bit of ground to cover. But this is all playing out at a very interesting time from like a very broad strokes perspective, because trust in mainstream news is got to be at all-time lows. Trust in large corporations is probably in a similar state. I don't think the average person has a high degree of trust for the government, the news, large corporations, banks, institutions, but they just know it as their best option. That's what they've interfaced with, and that's where they're going to continue to go. But how do you think this ultimately, comes about that people actually just start using blockchain systems, and that debate about like whether this is more trustworthy or less trustworthy goes away?
I think they have trust in communities. I think even though you might lose trust in mainstream media and some of these existing, I would call it top-down systems, something that you always have trust in is your community. It's like your friends, your family, the people around you. And I think blockchains actually do a really good job of activating communities just by the decentralized nature of it. And so I think something we've seen organically in the Monad ecosystem is that there's trust amongst community members in Monad, and that's what kind of gives it more power too. And I think that's the beautiful part that sometimes gets overlooked with blockchains. I think a lot of companies think they can, fork a code and, from there, like launch a blockchain and like it's going to be a smashing success. I think the unique properties of a real system is actually starting from community first, building the trust at that level, and then working your way up. And that requires a lot of elbow grease. It requires like a lot of traveling, a lot of meeting folks, and a lot of, continuing to build a relationship and trust with your ecosystem. And I think that's like sometimes the missing piece for most blockchain systems. And I think Monad actually hasn't stopped at just the technology layer. I mean, there's a lot of fascinating innovation at that layer, but also like building trust at the community level is really important, especially to your point around the macro right now. I think if we can continue to like have a strong foundation, trust in the community, and let that decentralization like principle kind of continue to like persist, it starts to create a more powerful force that's sustainable longer term too. And again, that goes back into like what we've talked about the origin story for payment systems, is that when you start in a decentralized, trustless fashion amongst banks or fintechs or now validators or community members, that compounds over time. And then you start to see a multi-decade, sustainable system that's going to grow forever. And I think that's what, we obviously aspire for with blockchains, and especially with Monad as well.
Yeah, I think you make a great point on the community element. One interesting thing about it is because a corporation or, a centralized system or entity, they can, build a community as well. Like community is a very universal concept. But the key difference, I think, is if you are looking to build trust for a corporation or something that is centralized, you're saying, trust me and trust this thing that I have control over. Trust me to be like the intermediary to take care of you directly. Whereas with a blockchain system, you're just saying, hey, I'm advocating for this technology. I don't have end-to-end control over the system. You don't need to trust me. You need to trust I'm asking you to trust my recommendation on this technology system. I'm not asking you to trust me as a king or like an end-to-end oversight over the entire company or system or what have you. And ultimately that means, there is no one single entity with that end-to-end control.
Yeah.
that can, make or break things.
Yeah, I mean, I think of it as like just like even the history of like open source software. Like a lot of the world today actually runs on open source software. It's because it's battle tested, it's trusted. You go to an organization, they're running 20, 50, 100, GitHub repos that are open source out there. It's transparent. You can audit the code as well. And they may have their centralized components to it, but a lot of it's built on open source systems. And I kind of think of blockchains as in the same fashion as well, where it's transparent, but it can be built on top of as well, where you can maintain and actually accumulate some of the qualities of that trust that you get in these open source systems. But then you can also build your own thing on top. And I think that's very much okay. That's just how the world works as well. So I think it's like a combination where I think we have built a really good paradigm in the world today where open source systems have proven to be actually really durable over time. And I think that's what people are going to ultimately look for, like for systems to grow in the future too.
We're getting cut off on time here. I think this is going to be chapter 1 of definitely a longer conversation. But Raj, appreciate you stopping by and sharing your perspective. I think there's a lot of exciting things happening behind the scenes and certainly a lot more to come.
Oh yeah, a ton. Thanks for having me.
Pleasure.